Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 323 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about basically the necessity of financial advisors and the potential need out there for financial advisors, because I've told you many times, I do not personally use one, but I do think they can serve a very good purpose in society, a very good purpose in the lives of many who are trying to learn about finance and investing, but they must be used correctly, and they must not overstep their bounds in their duty as a fiduciary to you and to your money. So I want to teach you how you should look at financial advisors and exactly what you should do if you feel like you actually need one. So we'll discuss all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, it's almost impossible, at least for me. I mean, maybe this is just my algorithm, but it's almost impossible for me to turn on, TikTok or any other, social media app and not see something about personal finance that's coming from somebody's mouth, right? It's just almost a cesspool of just advice, right? Because some of it is decent advice, but there's a lot of it out there that is just no good advice, right? A bunch of advice that's given that just either doesn't make any sense or is not applicable to your life, or just isn't going to help you any more than you would want it to, right? It's not going to help the everyday person. It's only going to help people who have X amount of money, or who want to work whatever program this person's trying to sell, or who wants to buy whatever product this person wants you to buy. And it got me thinking, there is a need, 100% a need for people who give financial advice. 100% there is, right? There's a need for people to help you to, invest your money. There's a need for people to teach you about financial markets, teach you about, money management. There's a need there. There's a problem there too. And there's several problems there, right? But there's a problem there that I think about quite often. And that problem is that the incentives of a financial advisor and the incentives of the client are rarely aligned, right? Because the client is wanting what? The client is wanting returns, right? Especially, they're investing their money. They want good returns. They want good education. They want knowledge, right? They want help doing whatever they need to do, right? But what's a financial advisor want? A financial advisor's wants are really one-sided, right? And that one-sided want is they want fees, or they want commissions. Basically, they want money, right? They want to make money off of this client, right? And a lot of times, and I've seen it, right? What you see is that a client will kind of get swept under the rug for any number of reasons, right? Or special attention may be given to a client because one client has more money than the other, or can bring more clients to you than the other client can. And so naturally, you see this disconnect, right? You see this disconnect between the client and the advisor, because there's not just this perfect incentive relationship. And that's the case in a lot of sales type jobs, right? There's not a perfect incentive. Naturally, a salesperson wants to make the next sale. Naturally, whoever makes commissions wants to get more people, buying whatever product or doing whatever it is, so they can make more commissions or more fees. I understand that, right? But ultimately, financial advising is not about the advisor, right? Ultimately, financial advising is about the client. And the client is the one who's out here needing financial advice. They're needing investment help. They're needing you to, manage their money in a proper way. They're needing you to help them, right? And not just help them in a way that's going to make you more money, but help them in a way that's going to maximize their money over time. And the problem is that a lot of advisors just don't do this. Either they will have some one-size-fits-all for their client, right? And that one-size-fits-all doesn't fit all, because there is no one-size-fits-all in our investments or in our finances, right? They're trying to one-size-fits-all it so they don't have to do as much work there. They can just sell more, right? Which it is a thing, right? It does occur that this happens. Or what you're also seeing is that there's just so many clients that you just don't get as much attention from the advisors you would like, right? And you don't get as much of the advisor's time and as much of the advisor's advice as you would have gotten otherwise. Now, how do we reconcile this, right? How do we think about this in lieu of the fact that financial advisors are needed? Because again, I do believe that financial advisors are needed, but I don't believe that they're needed in every case, right? So what are the cases in which I don't think they're needed? Well, one, I don't think they're needed if, first off, you don't have some substantial amount of money. When I say substantial, I mean at minimum tens of thousands of dollars to invest, right? I'm talking, $25, $50 plus $1,000 to invest. I think if you don't have that much money to invest, you shouldn't be worrying about having a financial advisor. And I'll tell you why. First off, advisors are going to take fees. That's just the case, right? And it's well documented. And I'll even give you a book reference that you can go in and read and look and learn the actual statistics behind it. But it's well documented that advisor fees are one of the biggest things that hold back investment performance. And this is something that is well documented in the book, the little book on common sense investing, right? Written by John Bogle. John Bogle, the founder of the Vanguard Group, very reputable source, right? And he lived his whole life talking about, hey, we're going to decrease fees. We're going to make it cheaper to invest in indexes and all these different types of things, right? And so it is expensive to use a financial advisor. Even an advisor who claims to have lower fees, it can still be expensive. So I think, with somebody that has, not very much money to invest, having to pay fees on not very much money is just not worth it, right? Not to mention, the amount of advice that you need to invest a smaller amount of money is very little, right? But once you get to a certain level of assets, and I'm not saying $25,000 or $50,000 is it. I would say it's probably a lot closer to maybe $250,000, right? You may get to a point where it's more difficult for you to manage your money, or maybe it's not more difficult, but you don't feel as comfortable managing that amount of money. So you want to, call on the help of some financial advisor, which is perfectly fine, right? And I understand, but again, we need to watch out for the fees that are going to be paid, because they can be quite substantial, okay? So it can be needed if we have a certain level of assets. I get it. But unless you have that certain level of assets, it's just not necessary. And why is it not necessary? Because there are people out there like myself, right? And I'm not saying we should turn to social media. Again, you heard my little spiel on social media earlier, right? But there are people out there who give good, financial information that can help you to manage your money, that can teach you how to do things on your own, to the point where you may need a financial advisor, right? And that's, perfectly fine if you can find somebody who's reputable, who checks out, right? But the whole point is, you as an investor, you as the person whose money is on the line, you have to make the decisions, right? The decision can't be made by the advisor, right? You have to make the decision, and that rings true even when you're investing your money. You must make the decision as to what you invest in. You must make the decision as to what process is going to be followed investment-wise. Otherwise, it's very easy to be taken advantage of, one. And two, you're not going to know what's going on with your money, which is an issue, right? You need to know what's going on with your money so you can, keep up with it, right? We don't need to look up, 5 years after having an advisor and see that advisor's underperformed the market for 5 years because they're trying to do something fancy or tricky, or that you've lost a bunch of your money because they've gambled it away on whatever, right? We don't need to look up and that be the case. So we need to keep our eye on things. We need to understand what we're investing in, understand what the advisor's doing, and then I can feel a little more comfortable letting them manage my money. Again, we're making the decisions. They're providing the education, but they are the fiduciary. They are the ones who are housing the money within whatever financial custodian they're using. Okay, so that is what I think first and foremost when it comes to the reasons that we may or may not want to use a financial advisor. You might not want to use one if you don't have a certain level of assets. You might also not want to use them if your investment ideas are going fine, right? And I'm saying your investment ideas not necessarily in a way that's like, oh, let's go buy covered calls on Tesla and let's do this, that, and the other. Let's be all fancy and use Robinhood for. That's not what I'm saying, right? What I'm saying is if you have followed an investment program, if that investment program is working for you, if it's already automated, you don't have to gain any more insight. You know what you're investing in, you know how you're investing, and everything's going good, right? And if everything's going good, then what are we doing, right? Why would you change something? Ultimately, if it's not broke, don't fix it, right? And I think that's a big thing that we need to really wrap our heads around when it comes to financial advisors, is that how much value do they really provide? Because ultimately, if you think about the amount of money that you end up paying them, hopefully they would provide quite a bit of value. So just think for a second, how much money do you think annually you spend for your primary care physician, right? Your doctor, right? The person who is getting the nod to try to keep you healthy, to try to help you to maintain standing upright and being somebody who can exercise, and somebody who can eat certain things, and somebody who can just live a healthy life, right? Think about how much you pay them annually. Now think about this. Think about if you had, let's say, $250,000, right? If you have $250,000 and you paid a financial advisor 1.5% annually, okay, 1.5%. That means annually you paid them $3,750. Do you pay your doctor that much annually? I think that's a great point to make, right? Because I would say that especially most healthier people aren't spending that much of the doctor every year, right? And probably aren't coming very close to that on average every year. Now, obviously, there are a lot of people who do spend that much of the doctor, and that's not my point. My point is the average healthy person here. And then as you increase assets, let's say you got to the point where you had, $1 million under management, then that's $15,000 a year, and even more. Are you paying your primary care physician that much every single year in order to keep, make sure that you're healthy, in order to check up on you, in order to do all the things that they do, right? Of course not. We're not spending that much on average, right? And then it begs the question, why don't we put more scrutiny on financial advisors? Because they're out here making these fees, even if it's just 1.5%, right? 1.5% can be a pretty standard fee that a lot of people are making, right? And if they're getting a bunch of $1 million asset clients, that's $15,000 annually a pop, right? Which great for them. But what I'm saying is that if we're not spending that much to even take care of our own bodies, to even take care of our own health, yet we're spending that much on our money, right? On making sure that our money is invested properly, on making sure that we're growing our money, all these different things, then shouldn't we be getting, one, some outsized return for that, or two, they should be providing so much value to us, so much education to us, that it's worth it. And my question is there enough financial education that's worth $15,000 or $3,700 every single year? And I think you need to ask yourself that, because if the answer is no, then you don't need a financial advisor, right? If the answer is no, that you wouldn't write a check to this person for this much money, then you may not need a financial advisor, right? Because just think about it. if we talk about the 15,000, right? That's $1,250 a month. Right? And most people don't see their financial advisor every single month. Many may even, see them quarterly, and that might be a stretch for some people, right? But if you see them quarterly at $15,000 annually, that's $3,750 on a quarterly basis. But if it was that $3,750 annually, right, on a quarterly basis, you're still spending $937.50 on your financial advisor. Again, is it worth it? Now, I'm not saying that the answer is 100% no. Maybe your peace of mind and ability to sleep at night and, all of those other things are enhanced by, you having a financial advisor. And maybe that financial advisor is providing you a lot of value, right? But if they are not, then that's a lot of money to be just throwing away. Now, another thing that we can think about is not just the value they provide as far as, hey, this, potential value as far as education or whatever, but obviously, the returns, right? Are they helping you to make greater returns? Because ultimately, if they're just helping you make market returns and they're charging you 1.5% every year, or if they're underperforming the market and continuing to, charge you the 1.5% per year, right? If they're underperforming the market, they are, in essence, charging you more than that 1.5% because you could be out making market returns very easily, right? Or if they're making market returns, then they're truly charging you 1.5%. But if they're creating abnormal returns being returns greater than the returns of the market portfolio, then they're making some of that back. They're helping you to pay for their fee. And so ultimately, if let's say again an advisor's charging you 1.5%, if they're not making more than 1.5% more than the market rate of return in your portfolio, which is very difficult to do on a sustainable basis. It's very difficult to make more than 1.5% more than the market portfolio. But if they are not doing this, if they're not creating those abnormal returns in that very large and sustainable way over time, then ultimately they are taking money away. Right now, again, ultimately there's a fee for all of this, and anybody else, we would pay them a fee, right? But again, is that fee worth it? Is the amount of value that they're providing, worth it, considering the amount of education, the amount of returns, the amount of value that is being created for you? It's something that you need to think about. And I'm not saying that the answer to the question is always no. I'm just saying that the answer to the question could just be up to you, and you may be really overspending on a financial advisor who's not providing you a lot of value. Now, let's talk for a minute about the value that they can provide, right? I kind of alluded to it a bit earlier, but I think the biggest value that financial advisors provide to their clients is peace of mind. I think it is this ability to sleep at night. I think it is this ability to not have to, comb through all the different options that they have for their financial life. And I think that's a good thing. I think it's a good thing when you don't have to get caught up in the weeds. If you're a teacher, or if you're somebody who, just it doesn't matter the profession that you work. If you're somebody who doesn't want to have to keep up with all the ins and outs of what goes on in the financial world, in the financial markets, then having a financial advisor, having somebody to help you is perfectly fine. Now, I would, give you a word of caution there, right? My word of caution is this, is that regardless of who you are, you need a certain level of financial literacy, a certain level of financial education. Because again, we should be the ones as investors that make decisions, not financial advisors. Financial advisors can propose options, right? They can tell you about things that are likely to occur. They can give you their opinion, right? Obviously give you their advice. But ultimately, nothing should be put into play unless we say that it should be put into play, right? If we do not agree to the way that the advisor wants to invest our money, then our money shouldn't be invested that way, right? If we do not agree in the particular way that the advisor wants us to take withdrawals over time, or if we don't agree with whatever it may be, then we don't do it, right? Because it is our money. They are just helping us manage it. Okay, and we can't forget that that is the relationship. The relationship is not, hey, here is my money, now you have it until I want it back. That's not the case, right? What's the case is, this is still my money. I'm going to tell it what to do, but you're going to help me, right? That is what a financial advisor is out there to do. And again, I think they can provide a lot of value in doing so, right? Because most people just don't have the financial knowledge in order to take on all of the, little things, right? All the little things out there, because ultimately there are a lot of choices to make, right? First and foremost, there are choices like, do I even want to invest my money, right? Do I even need to invest my money? Something that simple, right? Which I could easily explain, but that's not where we're going today, right? Could I invest my money? That's an easy question that I think financial advisors can be there to answer. I think just answering the question of what type of account do you want to open? Well, people would be like, an investment account, right? And they may not know that there's different types of investment accounts and different ways that they can put their money to work, maybe in a tax advantaged way or whatever else, right? Or the question of, what do you want to invest in, right? Do you want to invest in stocks or bonds, or do you want to invest in individual stocks, individual bonds? Do you want to buy index funds? Do you want to buy actively managed funds? Do you want to buy mutual funds? Do you want to buy ETFs? All these different things, right? That if you're not well versed in them, you may look up and go, I don't know, right? And looking up and going, well, I don't know, is not the worst thing in the world, right? But when it comes to everything financially here, I think you need to have some general knowledge. You need to have some general understanding. That way, when an investment advisor is talking to you about what you want to do, you can have a little step up in the game, a little better understanding. Because let's just go back to the doctor example I was using a little bit earlier, right? If something's wrong with us, right? What do many of us do? We will Google it, right? We'll look on WebMD. Even though doctors may hate that we look on WebMD, we do it, right? And we try to find out what's wrong, and we try to find out how to fix it, and we try to find out what the cure is. We try to find out if we can do anything on our own to fix it. Yet, with financial advisors, how often are we willing to just say, hey, you do it, you help me, right? I'm not going to look this stuff up on my own. I'm not going to try to learn this stuff on my own. You know it, you do it, right? And I think that's a problem. I think it's a problem that we're just saying, here, financial advisor, you figure it out, instead of actually learning for ourselves beforehand. Again, this can be a big thing in our lives, and this can be very costly for us if we're just turning over money with a blind eye. Now, ultimately, I think that a lot of vetting needs to go on with a financial advisor. Okay, I think that, again, they can provide a lot of value. Okay, now they can suck some value away from you too. Like I was saying earlier, they can absolutely do that, right? But I think they can provide a lot of value, but they need to be thoroughly vetted. Okay, now how would you go about thoroughly vetting a financial advisor? Well, obviously, what's the best thing that we have out there? The best thing that we have out there is reviews, right? And if they've been widely used, then trust me, they've been reviewed on Google reviews or whatever else, right? And I'm not saying go and just get fixated on the 1 and 2 star reviews, but look at the averages, look at some of the reviews, look at what people say, because let me tell you, a lot of Google reviews, if you can sift through the bull crap, which I think is kind of difficult sometimes, but if you can do that, right, you can really get down to what somebody's about, and you can really get down to the truth of how a place runs. Now, it's difficult to get down to that truth because, again, you have to sift through all the things that are just, crap, right? But if you can get down to it, then, you can really find out a lot about these individuals or this individual, right? So you need to do that. You need to do that due diligence. You need to make sure that they are, an investment advisor representative or a CFP or whatever they say that they are, right? You can do all those things on broker check or whatever else, and just make sure, right, that what they're saying is true. Make sure they have the proper qualifications and education, right? Look them up on LinkedIn. Look them up. Just do your due diligence, okay? And if the person gives you bad vibes, especially with your money, then just say no, right? Just walk the other way, because there are thousands and thousands of financial advisors out there, right? There are plenty of people to choose from, Don't just choose somebody because they happen to be in your neighborhood. Listen, we live in the world of Zoom. We live in the world of being able to communicate with anyone, anywhere, anytime. Right. And that ability has given us the ability to open up our options as far as, the services that we're offered. Okay. And, being able to have a financial advisor that may not be right there in your town is perfectly fine. Right. Because you can still communicate with them whenever and wherever you want to. And the meetings are just not going to be that different over Zoom than they would be in person. Okay. So just be very critical. Be very willing to say no to somebody you don't like, or be willing to say no to somebody who has a set of bad ideas. But the only way you can know if they have bad ideas is to actually know yourself. Right? To actually have some education beforehand, to actually understand what an IRA is, to actually understand what a mutual fund versus an ETF is, to actually know what a healthy fee structure looks like versus a fee structure that is basically stealing money from you. Again, we have to know these things before we even show up, or else maybe not purposefully are they going to dupe you, right? But maybe you get into a situation where it's just not advantageous for you. And ultimately, whenever you have an advisor, just like whenever you have a doctor, right, that person is working for you. That person is working for your health, either physical or financial, right? That person is working for your health. Okay. And ultimately, if your doctor kept telling you that, let's say a bunch of things were wrong with you and those things weren't wrong, then you would stop going to that doctor. Right. Or if that doctor was telling you that nothing was wrong with you and yet things were wrong with you, then you would stop going to that doctor. Right. You would find another doctor. Same thing with financial advisors, because some financial advisors will tell you, hey, nothing's wrong. Your money's all good. Everything's great. Right. And yet, if you compare it to market performance and you take out fees and taxes and all these things, you'll find out, oh, well, my returns don't even stack up to the market, right? When they're supposed to be stacking up to the market. That's a problem, right? And so they may tell you that things are fine when they're not. Or a financial advisor may tell you that certain things aren't good. Certain products aren't good for you. They aren't things that you need. And you may do your education and go, well, that would be perfect for my needs. Right? That would be a perfect thing for me to invest in, and yet I'm not given that option by my advisor. So you may find someone else. Okay. Again, I know I keep circling back to this, but I think it's just important to note. You pay financial advisors a lot of money, and obviously it's indirect because it comes out of your account balances, and you're not just writing checks in most cases, right? But you need to be very thoughtful about who you allow into your financial life. And you need to be very thoughtful about who you allow to be a decision maker in your financial life, because ultimately you need to be the decision maker. Ultimately, you need to be the one who puts the final stamp on whatever decision is made, right? Again, they can offer up advice, they can offer up help, they can give you options, and I'm perfectly okay with all those things, right? But at the end of the day, if they are trying to manage your money for you and not allow you in on the conversation and just, telling you to don't worry about it or get out of the way or, you wouldn't understand, right? Those are dangerous words, because that's saying you're too dumb to be able to manage your own money. And the truth of the matter is that most financial advisors aren't doing anything that's too difficult for any one of us to learn, right? We can all learn these things, but if we don't want to take the time, if we don't want to step into that place where we're like, hey, I am responsible for my own money, right, then it can be very, very difficult to understand what's going on. And it can be very, very difficult to check somebody on what they're doing with your money. So ultimately, what's the bottom line? The bottom line is this. Financial advisors, can they provide value? Yes, but there's just big caution everywhere. Right? There's big caution everywhere on the way that they're paid. There's big caution everywhere on what their incentives are. There's big caution everywhere on whether or not they're offering you the best thing for you. There's big caution for yourself on, are you even educated enough to know the difference, right? Can you have the knowledge to know the difference between what's good and what's not, right? And if you don't have that, you need to gain that, right? You need to be very critical. You need to provide some scrutiny, because again, if we're going to look at our financial health and our financial life, and we're going to spend such a large amount of money, right? Shouldn't this person or these people be able to do what's best for us at all times, and us be able to look and go, yes, that person is providing value to my life? Because we would look at our doctor if they weren't providing value to us and go, what are you doing here, right? Or if they were giving us wrong advice, we would find a new doctor, right? And don't be afraid to step away from a financial advisor, because guess what? It costs you nothing to very, very little, and ultimately it can gain you a lot over time if you find somebody that is good to work with and not somebody who is taking advantage of you or is just ignorant to what could be occurring in your financial life, which ultimately, there are a lot of financial advisors that can be in that place. But financial advisors can provide value. They can help you to navigate parts of your investing life. You just have to be careful, have to be thoughtful, and pick one out that is going to meet your needs, not that met the needs of your friends, that met the needs of the rest of your family, that meets your needs. And then ultimately, you can be better off in your financial life over the long term. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.